savings accounts, emergency funds, or rainy day funds. Whatever you want to call it. The questions most viewers ask is, how much is enough? How much should I have saved? Or do I have enough already? Do I need a separate emergency fund, and a separate rental property fund? On my journey to financial freedom, from 0 to 20 units. This came up a lot during the early days of being a small landlord. Even though I have considerably grown my rental portfolio, I still look at the basic blocking and tackling. Especially as it relates to personal emergency funds, and investment property emergency funds. In real estate, the key is liquidity. You don't want to run into a situation where you are forced to sell. That's when you potentially lose value on the sales price. The mistake most small property owners, or landlords make, is they don't really view their rentals as a business, and as such, they manage it as an extension of their personal finances. Or like an ATM machine. After all, it's easier that way, but it's riskier and sometimes illegal to commingle funds. Commingling funds should not be done. It's best to separate your bank accounts, and for some, it's even wise to create a business entity for the rental business. In fact, most states require a landlord to store the tenant's security deposit in a separate bank account, so that the funds are not commingled with personal money, or deposits from other tenants. I will do a separate video on LLCs for your rental properties, but I believe this is the best way to go for me. I created a separate LLC for each property owned. If you're interested in learning more, please watch the video on why LLCs for rental properties was the way to go for me. But back to emergency funds. The question, about emergency fund for the business and personal, what is appropriate? I believe that landlords should have a variety of bank accounts, separate from personal accounts, in order to successfully operate their rental business. This also includes emergency funds. So let's separate the two. For my personal emergency fund, as an example, I keep 6 months' expenses in a personal emergency fund. This amounts to $5,100 per month, in basic family monthly expenses, times 6, to account for the amount of months without income. I come up with a $30,000 rough estimate for a personal emergency fund for my family and I. This is a conventional approach, but should be based upon how long you need to find employment, or expect to be without income. 6 months may not be long enough. This doesn't take into account receiving unemployment insurance, or the probability that we still receive income from my wife's job, so maybe I have a conservative emergency fund, okay? That's what it's for. But this emergency fund is separate from my rental business. Then as it relates to the rental properties, I believe every landlord should also have these 3 types of accounts. 1. An operating account. In this account, you'll deposit rent, and pay the mortgages, taxes, insurance and other expenses, for all your properties. 2. A security deposit account for each rental unit. You'll need one bank account, with check writing privileges, for each unit you own. You deposit the tenant's security deposit into this account, and leave it there until the end of the lease. Online rent collection tools can collect the deposit, and send it to a separate account for you, automatically. 3. An emergency fund account for all the properties. This is a single savings, or money market account that acts as your safety net. This should be separate from your personal emergency fund, discussed before. Like a personal savings, I suggest you build an emergency fund to handle all unexpected repairs, and help mitigate your vacancy losses. This is the third account. But how much should I have in the emergency fund? Simply put, the more properties you have, the more that can go wrong. However, the good news is that it won't all go wrong simultaneously. Except as we have seen during pandemics. If you only have a few units, 1 to 10, your rent is limited, and major repairs will consume a higher percentage of the overall income. Your emergency fund accuracy becomes of greater significance. As you grow your portfolio to more than 10 to 15 units, you are essentially diversifying your assets, and each property becomes a smaller percentage of the whole pie. During normal times, I think the formula for greater than 15 unit counts allow the emergency fund to be decreased given the diversity aspect. Some suggest 30 to 50% credits. I agree with that logic. But let's focus on smaller portfolios. To calculate a small unit emergency fund, 1 to 10 units. Add up the following expenses for all of your properties. Monthly mortgages, taxes, insurance premiums, fees and operating utilities. Notice that I did not include repair costs or service fees, like landscaping, because if the money train stops moving, the first thing to get cut is the gardener and non-essential repairs. You should always include utilities, because you have a legal obligation to keep the lights and heat on even if the tenant fails to pay rent. I've seen real estate gurus recommend, add up your expenses, then take this number, and multiply it by 3. And then cut the total in half to reveal your minimum emergency fund. I believe this number to be way too low. If you are a single-family owner or small multifamily building owner, please don't use 50% of 3 months' expenses, as that is not enough. The pandemic would be a great example of how that fund could be wiped out very quickly. By using a low emergency fund, you are setting yourself up for some stressful times. Failing to prepare is preparing to fail. The rental property emergency fund for all my properties is around 9 months operating expenses. This comes in handy during times of extreme stress. For example, non-payment of rent, emergency repairs, eviction moratoriums, and other unanticipated challenges to my business. This way I am never forced to sell. For me, for example, I use $7,200 per month. But with additional future acquisitions, this reserve fund will have to rise, unless I start to offset by diversity credits, which I haven't done yet. I currently keep around $65,000 allocated in the emergency rental fund for these scenarios. As mentioned previously, you can combine this money with your operating account, if you'd prefer. As long as you don't spend it. So when you add up both of these, I need to keep $30,000 in a personal emergency fund, and $65,000 in a rental emergency fund. The question then comes up, are there any synergies? Do you have to fund both? All that money just sitting and doing nothing? Personally, I like keeping more capital set aside for emergency than maybe you need. The times that you will need it for a vacancy or non-payment of rent are highly correlated with the times you might be at higher risk for losing your job as well, like during a recession. This is a personal decision. I like knowing I fund my emergency funds to a high confidence interval. Your risk appetite may be different, based upon the stability of your job, your spouse's income or ability to work, or other scenarios that make you more comfortable or less comfortable. Suffice it to say, I feel pretty good, with a stable employment picture, my wife working, cash flowing properties, a healthy personal emergency fund, plus a rental emergency fund. Maybe I could take more risk, but then again, you need to have attractive deals to deploy the excess capital. I am still seeing valuations misaligned with the expected returns, on close to 90% of the deals I evaluate. So from my perspective, it's not like I am missing anything yet. The risk has to match with the reward. This isn't gambling, it's investing. I hope you liked this video and learned from it.